Hello and greetings to Streetwise Economics podcast, where myself, Isaac Jonas, and my co-host, trusted money coach Blooming Umoren, we talk about the markets. So today, I am very pleased again to have my co-host Blooming. Welcome, my friend.
Thank you, buddy. Excited to be here again.
It's exciting, and today we are going to talk about what's happening in the U.S. equities market, the geopolitical tensions, and what we think could be the implications on the market and some of the trades that we have been making over the past couple of weeks. But like we always like to say, we like to start off by saying that this video is meant for educational purposes only. Nothing that we say here should be taken as investment advice. I always tell people to say, look, investing or trading is personal. Every person has different circumstances. As such, you should always consult financial advisors or reach out to us if you want to learn more about investing in the market. So let's get started. The S&P 500 in the US has been on fire. It's back to almost actually all-time high. Tell us what's the story, what has been happening. And you are a Tesla bull, there was the robo taxis. Tell us, coach, what's going on in the US equities market?
So, as we enter the second half of this year, the market has really rebounded from the April lows, technically. I remember
Yes.
when, the market dipped so much in April that a lot of people panicked because of the tariff. And then we also had a
Yes.
lot of geopolitical tension. But for me personally, if
Yeah.
the tension in the Middle East and also tariff and oil dipping could not bring down the market, I personally cannot see what can bring down the market in the second half of the year. But hey, I could be totally wrong. But personally, as an investor, I think that the market is set up to go up even for the later part of this year. That's just me
Mhm.
personally because I mean, I said Apple, Nike reported yesterday and
Oh,
the
yes.
earnings wasn't even that amazing, but the stock went up. And I was listening to Adam's quote today, and even went on his X account, and it's just like
Mhm.
anytime a company reports and it was bad earnings, but the stock just went up, it's just telling us
Yeah.
that maybe the market has already bottomed. Maybe,
Mhm.
April was literally the best time that one could have just aggressively bought stocks, especially quality stocks. So for me personally, I've been investing even during the April lows, and I feel like we're gonna go higher for the later part of the year. So that's just my take for now.
Yes, and we always like to say, make sure you subscribe and follow. Even my friend here, he has a thriving and growing following on YouTube and on social media platforms, so that we bring, live commentary. So, my take on the market, for me, I've been trading for the most part. I would say now my investing and trading has been like trading, I would say maybe 70%, and of my time. And then investing is kind of like boring. I buy and hold. That's it, right? And most of my time I'm researching. But my trading has also shifted, because something that I noticed was that when I was day trading, I wasn't making money and I was as much money, but I was kind of like on the edge. It's kind of like gambling. So my angle, Ron, if you are watching, we actually developed some methods through observation and testing. And one thing that I learned from this is that now when we are trading, even though we take positions for the short term, we trade on a longer time frame. For example, when I'm doing my technical analysis, I'm looking at the day, or maybe I'm looking at the 1 year time horizon. And the bottom line is like we are looking at companies that I would otherwise love to own. So
Right.
the fundamentals, that's more like 90% of the thing. Do they have strong balance sheets?
Mm-hmm.
Right? Do they have little or no long-term debt relative to the free cash flows?
Mm-hmm.
Right? And then I look at other things. So when I take positions, let's say for example, I take a leap, that is an option contract, betting that that security is going to go up, and with a time horizon of at least 9 months. I usually deploy it when the stock that I'm, looking at, if let's say it has strong fundamentals and it drops like maybe by 20%.
Mhm.
So I take a leap when it is down, and provided I've done analysis and I believe that the structural situation of that company is not going to be worse.
Mhm.
So I just deploy that. So that means time is on my side,
Right.
and then I get in and I get out, and I've been using cash secured puts.
Mhm.
And now I'm not using covered calls because now the market, it seems to be on the
On the
on the
right.
rise.
Yes.
And my uncle and I, who is my mentor pretty much, like we are also now kind of like considering starting to trade the VIX once it reaches the certain level, because what we have observed is that the VIX, which tracks the volatility, usually we are looking at what investors and traders are expecting for the next 30 days. So it's priced in. Usually it usually goes in opposite with the equities market. So now that the equities market is now starting to, the S&P 500 in particular and the
Oh, yeah.
Nasdaq are now on the top, it means the risk on the VIX, in my view, is now lower,
Mhm.
right?
Yep.
Uh, in my view. And so, but I'm just waiting for it to reach some technical thresholds, and then we start to deploying. And usually we're thinking of probably maybe putting in 1/3 of our portfolios
Mhm.
into the VIX,
Right.
right? Because I've observed that now that the equities market is now, you're looking at Amazon is now trading at 200, almost 219. That's when people want to get in at the
Yes.
top. It's like, oh, the market is now, for me, the stocks that I own, that's fine, a
Mhm.
few of them, right? But now it's not time for me to chase that.
Right.
So what's your take on that, coach?
I think yes, it's very important to know that even though the S&P 500 and the other three indices are literally reaching all-time highs, and for new
Yeah,
investors might want to just get in, even though we
yeah,
cannot predict the market over the short term. But for people that have been in the market, that have been participating, we understand the cycle, we understand the pattern that, hey, when a
yes,
stock is literally reaching an all-time high, that is usually not the best time to get in. You wait for a
yes.
retracement, you wait for a correction before you then go in. Because why? By the time you get into a stock when the stock is already at the all-time high, your margin
Oh,
of safety is literally
oh.
wiped away. That means that there's more likelihood or more probability for that stock to just go down. And I mean, you have to wait several weeks or even months and even sometimes years for you to even recover. So,
And you said it
yeah,
aptly, coach, the other time, that in some cases, actually, you are providing exit liquidity for
yes,
hedge funds, for big funds.
yes,
You are getting in, they are getting
yeah,
out.
yes,
I,
yes.
I want to give an example of Seco Internet
Mm-hmm.
Group.
Yeah.
Today, it's trading at $180. Right now, it's trading at $180.45. It's down 15%.
It went up
That
almost
is
300, almost 300
300.
dollars,
So
almost.
imagine there are some people who were like, who got in there. So my experience actually in investing and trading has been like, I really have to have my own thesis
Yes.
to say, look, I don't just go because of hype and stuff. If there's a stock, so most of the time, like we have said here, I'm doing research on stocks that, like, okay, there's this stock that I see probably on Bloomberg TV. And what then happens is that I then research. And if then that stock drops and it's on my watch list, I quickly analyze, like, okay, is this something that's going to be permanent?
Mm-hmm.
And then if something that I think, for example, the stock is going to rebound in the future and it has strong fundamental, I just get in gradually. If I want to get in like 100 shares, I put 10, 10, 10, 10 as it drops,
Right.
right? And I average it down, and then I leave it. I don't just jump in to say, oh, just because there's Bitcoin and stuff. My experience has been that most of the time is like you get smoked. When I'm trading or investing, I
Mm-hmm.
like to give an analogy of, like, it's like you're crossing a river that is infested with marauding crocodiles. So Any misstep that you
You
make,
know,
I always see crocodiles kind of like waiting to.
to
so
just chop off
so
your
that
head.
those are the people who take the money, either hedge funds or
Yes,
those, because each time that I make money, it means I'm taking it from someone
right.
who is losing.
Yeah, technically,
Right?
yes.
Yeah,
Yeah.
so when you lose, it means somebody made some money. That's It's a zero sum game.
Yeah, I think some people when they come into the market, and even for me personally, emotions too is part of investing. When you're investing, it's important to separate our emotions from the noise, technically.
Yes.
Because when you see a stock going up, especially I saw Cycle IPO'd at 130. No, sorry,
Yes, imagine.
at $31. And it went
Oh
from
boy.
31 to 60 to 90. You're like, oh my God, to
To
120. That's
300.
almost $300 within the space of just less than 2 weeks. So for newbies that come into the market and they see that and they would say, oh, this thing is right at 250. It went to 290. It's gonna go to 350 or 400. Those that are seasoned in the market knows that, hey, this is even your cue to get out. Especially when you see that every day this is just going up. The same thing happened for robotaxi when
Mhm.
the event, and right on Monday people just plowed in and Tesla went as high as $50 in one day. But look at Tesla today, is down. So when people just FOMO into a stock, into a security, it's just telling
Yeah.
you that, hey, this is not the best time. Now that Tesla has already started to retrace again, most people are still not going to buy, and they'll wait for it
Yeah.
to start going up again before they then FOMO in.
Yes.
So
Yeah.
even the market has been showing us series of examples like that. The same thing for Bitcoin. Bitcoin is hovering around $107,000. Bitcoin was still $75,000 this April.
Yeah.
So we can see this pattern, and we're just saying it's important to separate your emotions when you're trying to invest, especially if you're a long-term investor. A simple way, just DCA. If you can DCA over time, you're going to be
Yeah.
good.
And coach, the other important thing I have learned is that, is I keep on telling people, like people come to me and I mean this respectively, like, oh, tell me the stocks that I should buy and stuff. I am not a licensed financial advisor, neither my friend is, but we are coach, we are educators, right? And I think the most important is to learn the skill. Like what I've learned is I learned from people like Warren Buffett, you know, public interviews. I've been lucky enough to go to the Berkshire Hathaway meeting yesterday. But what I learned is that Warren Buffett and Charlie Munger, may so rest in peace, it's about mastering the emotions, like you said. And a lot of people, they chase after these, shine and glamorous stocks, but year in and year out, they were compounding their money at almost 20%. So what happens is, like, a lot of people, they have one or two stocks, like, or maybe they might be lucky, and then they think like, oh, I'm a genius.
Mhm.
And then you lose a lot of money because you get smoked. That money, maybe you put, maybe let's say you put 100,000. I've seen people who have lost their money like 90%. So
Right.
if you had 100,000, it will go down to $10,000. So, but now if you compound your money at 20%, small, steady
Mhm.
growth, at the end of the day, you make money over time. So you have consistent dollar cost averaging, like what Coach Blooming just mentioned, but also buying high quality companies.
Yep.
And that's what Coach Blooming and I teach our clients to just see and be able to identify it. I can identify a business in like 10, 15 minutes that this business publicly listed is worth my time. If not, if it doesn't pass that, I don't spend my time. So it comes with experience.
Yes, and even sometimes, as a student of the market, when a security that you're not investing in starts to skyrocket, sometimes you might feel the FOMO that, hey, I wished I invested in this. Oh, the stock that I invested in did not perform as I wanted. But the irony of the market is the moment you then decide to chase after that, the very one that you left is then going to start going up. So it's important to know that if whatever stock or security you want to invest in, if you can study the fundamentals, you believe in the leadership, and you think that this is going to be here for the next 5 to 10 years, that this is going to perform as a long-term investor, just this year over time. So I just feel like this market, even though we're nearing the all-time highs, for those that are not yet participating, it's not late to get into investing.
Yes.
Because most people, when they come into investing, one of the major questions that I get is, oh, Blooming, how much can I invest? You can invest any amount. Any
I
amount.
had other
Yes.
clients who said, "Is my return guaranteed?" I said,
Guaranteed.
"Nothing is guaranteed in this market except maybe if you do like fixed term deposits to say they will guarantee your principal. There's a risk in the
There's
market,
even
right? Whether, yes,
even with a guaranteed principal, there are other factors that are eating whatever returns that you're getting called inflation.
exactly.
So for those
Yes.
that are not students of the market, I'm telling you that it's not too late to get started with investing, but the most important thing is to educate yourself on how to get started in
Yeah.
the market. Some people are still waiting on the sideline. They started this year, I'm going to invest, and this is literally half of the year, and they're yet to invest. So I'm just saying that for anyone that is not yet investing, this is literally one of the best times to start learning about the market because the greatest wealth transfer is literally happening right in our presence, and a lot of people are just sleeping. They're just sleeping through it and they're ignoring it. So the market to me, by the end of this year, I don't know where it's going to be, but I'm optimistic. I'm bullish that we're going to be much higher than where we are today.
As we are about to wrap up, Coach, I think I just wanted to pick your brains on the geopolitical risks. For me, when I saw that the sort of de-escalation in the US,
Hmm.
I had a conversation with one fund manager at one point. He was managing over $500 million, and one of the things that from that conversation and my other long-time friend, I won't mention their names, was that my greatest takeaway is that sometimes, I mean, as an investor, you must have a time horizon. Like in that case, like if I'm long, right? The idea is for me, these factors like the GDP for the US, it contracted. It shows that the economy contracted, right?
Hmm.
But sometimes we panic. People will panic. And what I do is I take those as buying opportunities only on fundamentally strong companies
Hmm.
that are undervalued. Right now, there are also other stocks that are actually undervalued. So those are the ones that I'm looking at. So geopolitical risks, macroeconomic factors, or anything that can potentially spook the market. For me, I ask myself to say, how long do I want to invest this money? So it starts from, do I have an emergency fund that is 6 to 12 months of living expenses? And then do I have a cash buffer? If I have that, then I get in. And my simple formula is buy low, sell high. And when I do catch the keyword puts, I sell high. That means I correct premium and buy low.
Hmm. It's just the nature
So
of the game, yeah.
it's the nature of the game,
Yeah.
right? Yeah.
So I think one of the other thing that I just want to mention before we wrap up is when we invest and you see that, oh, the thesis that I had on a particular stock no longer holds, meaning that you no longer believe in the execution for that company,
Mhm.
sometimes it's so difficult to just part ways with that stock. And this is what is happening to me with Apple.
Mhm.
Personally, I remember when Buffett started selling, I think last year and even 2023, and I was like, oh,
Yes.
the Oracle is selling. I wonder what he he has seen here. And I remember
Yeah.
Apple was trading around $250 then. And I was just like,
Yeah.
oh, let me just stay here. But the
It's
more I,
trading at 201,
yes,
almost $201,
yeah,
50
so
cents now.
the more I just look at it, but this is my own personal decision.
Yes.
It's one of
Mhm.
the stocks that I'm going to be exiting. It's not that
Mhm.
Apple will not still do well over the long term. I just
Yes.
think that it's not well positioned to just dominate in the next 10 to 20 years. But I could be 1,000% wrong.
Yeah.
So
And
for
you're okay.
and I'm
You're
okay with
fine.
that because I'm just like
Yeah.
I no longer believe in this company. And the moment that happens, history has shown me once I don't believe, just exit it because that's just my
Yeah.
intuition telling me that hey, you need to double check this thing. And I've been looking at it and I'm like, okay, I need to exit
Yeah.
this. So that at some point as an investor, it's okay to say, hey, I made a mistake and I don't think that I'm going to be
Yeah.
investing in this for the long term and it's okay.
Yes.
And one of the other
Yes.
things that I also do to separate my long-term investment portfolio from my short-term investment portfolio, which is retro trading. Trading is just like, okay, if I screw this up, it's not going to mess up my overall portfolio. And that is just the way I manage risk. But that's just
Yes.
my own personal strategy.
That's good. In the interest of full disclosure, I own some shares for Apple.
Hmm.
And my view for Apple is I think they've been struggling on the AI space. So you have
Yes.
NVIDIA, and nothing we are saying here is investment advice, like I said. But you know, I think I'm looking at companies that are bringing in new ideas, but I still believe that Apple, they have a strong balance sheet, and Apple being Apple, maybe they have something in them
In the pipeline.
on their sleeves.
Yes.
But once you have that, you want to be comfortable and sleep at night. But I think overall, I would say once it reaches a certain level, probably I'm gonna exit
Hmm.
because what I've seen is like I like to rotate and make my money and grow my account faster.
Hmm.
So, is there anything that you'd want to share, Coach, as we close here?
I think for those of you that want to know about, okay, what am I doing in the market personally? What moves am I taking? Feel free to join my investment community. It's on Facebook. The
Yeah.
link is going to be in the description area below. This is where I share personal traits. This is what I'm doing in the market, and I also give update on what is going on in the market every day. But apart from
Mhm.
that, there are some stocks. I mean, there's a particular stock that I'm betting on. This is
Yeah.
an investment that I'm ready to lose 100% of my capital, which is
Yeah.
Meta Planet. So this is
Yeah.
a Bitcoin proxy, meaning that it's positioning itself as a Bitcoin treasury company. So,
Yes.
and I remember seeing the stock around $3 something, and I did not make the move. I saw it at $4, and I still did not make the move. The stock is at $10 now. So I think
Did you eventually buy, Coach? And again, this
no,
is not
I have
investment
not yet.
advice.
My buy zone is $8 to $10. So
If it
if
drops.
it drops to that range, I'm gonna start buying. So, but again, I think it got to $16, so it has already corrected. It has already retraced about $10 and some change. So, but this is just an investment that I'm betting on for the rest of this year. Hopefully, the market works in our favor and I'm handsomely rewarded. But again, I'm just showing this that hey, this is just a stock that I want to play in, and this is not a long-term investment stock. This is just more of a short-term investment for me. So,
That's fantastic. I think for me, I have been trading, but my trading is kind of like, evolving over time. And those who want to learn more, make sure you subscribe on YouTube and also follow me on my various social media platforms. And if you want one-on-one coaching, you can reach out to me or my friend here, and I will put our respective website. Mine is www.streetwiseeconomics.com. And for you, coach, it's what?
bloomingmorin.com.
Yes. And you have to invest a bit, you have to pay some tuition fee. We also paid.
Yeah.
Sometimes you make mistakes, but at the end of the day, eventually it pays off. So until next time, uh, trade and invest wisely, and may the markets be on your side, like we always like to say. We'll see you in the next one. Bye bye for now.